Hello traders, this is Mike Hamilton from Trade the Easy Way, and I want to kick off by just thinking about where we are in terms of the annual cycle and the data that's coming up, and then just think about where that fits in with where we are now in the actual indices themselves. So this is a seasonal index of the FTSE. You can see it's come from equityclock.com. Very useful site. So typically September is one of the most volatile months of the year. So we sell in May and go away, rise up in the early first part of summer, and then dip right back into triple witching. Triple witching is more of a US concept because the US market is dominated by options, and those options and contracts expire and roll over into the new contracts, etc. So you've got three series of bonds and options and futures contracts that switch over in every quarter, and on the third week of September we have that for the final quarter. Okay, so yeah, this is not unusual to see a deeper pullback. Normally this is just a seasonal average. This is not, you can see this is a 20-year average from 2016. So normally you sell into the end of the previous year, start to pull up in January, February, run into May, sell in May and go away, and then normally you come out of September into October and you get a Christmas rally normally. Okay, so let's now compare with where we are. This is the FTSE. So this matters because it's a helping hand into where you might see deeper pullbacks. So this year we did sell in May, but only for a very short period. We came into June, got a big pump up in June, and once we got into the end of June, we picked up in July and then ran up through most of the summer. Only finally now we're hitting the most volatile month of the year, and we've already seen one decent pullback in the FTSE. I would expect to see any small move into that resistance, possibly a bit higher, then sold into right down into 89.50. If we find ourselves down at 89.50 end of September, early October, and then the buyers step in and we get some buy volume coming in here, then I think we could end up the year at 95.43. And that's my end of year prediction, 90 for the FTSE, 95.43. So let's now translate that onto the Dow. So I've got the Fibonacci range from this low in, what's that, July, and this high in August. So we've had a 1, 2, 3, 4, 5, and now we're getting a 1, 2, 3 wave correction. So my prediction for a pullback in the Dow is 44.5. If 44.5, if we do come in as low as that and we hold, that would take the RSI down to a low, meet up with the 50-day average. What have I got on here? I've got 50 and 20. So if that works and we do find ourselves down here again, mid to late September, early October, holding, then I think we could finish the year at 46.5. Okay, so that's my prediction for the coming weeks and into the year end. Of course, if this is going to roll over and we stay under that trend line, then you've got a head and shoulders short on your hands, and we've broken the neckline, broken support, and we're going to see a much deeper pullback, potentially down to 42k. Alright, so that's a bull. If the bulls come in and if we hold 44.5, we're going to 46.5. If we do find ourselves really falling over and this head and shoulders sell comes into play, then watch out for 42. So I thought this was a good one to talk about next. This is SSP. They've got 25% of the multi-billion-dollar food snack business in airports predominantly. So I've been looking out for this 150. So I've bought in at 150 today. My stop is going to be underneath this pink line here, 147. I've got to stop at around about the 143 mark. So I'm risking that much capital to get back to the £2 mark. 206 is an extension on SSP Group. So this is Vodafone. Vodafone's had a good move into 90p, pulled right back, reconnecting with the averages. As long as we don't close underneath 80, I still think this could do a lot more. But if you're swing trading it, then 90, well, ideally a pound would have been a good place for that to go and visit. It's not done that. There's the current trend line. So we can come all the way back down to 80 and still be inside this trend. There's 50 is the top of that grey line. So RSI is divergent, so we were divergent of those highs. In other words, we had a higher mark on the RSI index on 24th of July. We've had a lower high on this recent 28th of August high. So there's an indication that that Vodafone could top out that level, and here we are potentially coming back into that support line. Okay, penny stocks like IQE. Talk about this for a very long time now, it seems. We are holding up, but just close underneath 8. That's going to go and potentially visit 6. Metals 1. Not so long ago we were 8.5p. The resistance there at 9p. We didn't even make 9p. And here we are struggling down here. I'm still in this one, taking a bit of a hit on it, but I'm not overloaded on it. I don't overload myself on these cheapies. If we can, so we didn't quite get to resistance, or we got to a 20-day average there and dropped off, which is obviously a very weak sign. So this indication was on 13th of August that could drop. If we can get back above 5p, then this could pick up nicely if we can get some momentum, some volume behind it. So that's on metal 1. So you can see the extent to which the heat, momentum's coming out of the UK market. This is BT. Couldn't get through that 218. I think we could easily come all the way back to 190. If we come back to 180, that's a really good, very handsome pullback. And of course, they could so easily come all the way back to the 150 mark if that doesn't hold. So we very divergent up here on the RSI. We've topped out there, and that could so easily take a big step back if we're not careful. But if we do come back to 190 and hold on volume, then I would buy down there and see if we can get back to 235, 250. So this is a time to be very careful, as you can see. The UK market seems to be prepping for the autumn budget. So this is Legal and General. It hit 260 and here we are at 237, looking lower. Next stop 235. So all the more reason to go right through any stock you got. Check that you're happy with any stops that you put in place. If you're trading without stops, then you need to be super careful. Alright, so I'm going to show you, I didn't talk about this one, Softcat. Yeah, so I'm in Softcat. Don't think I mentioned this before, did I? It's gone all the way up to almost 1650. Wasn't up to 1650 for very long. Held up yesterday, and here we are dropping right back to where we came from. So I'm going to sit in this. Could easily see 1565, maybe lower. Ultimately, I'm looking for this to go to 17. And if it really gathers momentum, then a lot more. But yeah, it's a big number of stocks doing the same thing, pulling back. There was a lot of resistance up there. So some opportunities are coming up, but I think we just need to bide our time. Okay, there's a lot more stocks that I'm scanning and going through and so on, but these are the main ones I'm looking at. Let me just show you a couple of US ones. I do like ARM. It's got a series of lower highs here. So, but we had a very nice sweet wave pattern to the upside. We're experiencing a good corrective phase here. But if we come into 120 or maybe lower and hold, then I would be a buyer of ARM and ultimately look for the 200 up there. The other one I'm looking at is AMD. So AMD, is, like so many stocks we're looking at, has had a good move. It's a good corrective pattern here. I would like to start to look at it at the 150 mark, but it could. I'm going to leave it, be patient, and see if it comes down and rests there. That's it for now. I hope that helps. Talk to you soon.